Good day, students, and welcome to this lesson on petty cash. Petty cash is part of the Office Administration Syllabus, Section 9, which deals with accounts and financial services. Let's get started. By the end of this lesson, you will be able to define the term petty cash, define terms associated with petty cash, record petty cash transactions in the petty cash book, balance the petty cash book, and restore the impressed. Let's first look at a definition of petty cash. What is petty cash? Petty cash is a small sum of money accessible for minor expenses. Minor expenses includes things such as taxi fares, office supplies, postage, etc. The petty cashier keeps a record of all petty cash transactions, receipts coming in, and disbursements, which are sums of money given out or issued. The petty cash is kept in a petty cash box or till in the organization. Terms associated with petty cash. Voucher. A voucher is a small form that documents a disbursement. A voucher authorizes withdrawal from the petty cash till or box and is usually signed by the petty cashier and his or her supervisor. The float. This is the maximum amount that can be held in the petty cash till or box at any point in time. Impressed. Impressed refers to a type of cash account maintained by an organization used for paying for small, incidental, or routine expenses. The petty cash system is kept or maintained on the impressed system. Restore impress. This refers to the reimbursement or replenishing of funds which have been taken out of petty cash. The impressed is usually restored on a monthly basis. How do we record transactions in the petty cash book? The debit side of the petty cash book is used to record receipts. The credit side of the petty cash book is used to record payments. The petty cash book consists of analysis columns, and the totals of these columns are posted to the relevant ledger accounts. The term balancing off or balance off means to find the difference between the total debits and total credits. Students should pay particular attention to the balancing off procedure, as this is often an area where mistakes are made. It should be noted that the balance carried forward in the petty cash account at the end of a given period is usually the cash in hand, meaning the cash in the petty cash box or petty cash till at the end of that period. Let's now look at a worked example of how the petty cash is maintained. Petty cash vouchers were issued for the following. Here we have the voucher numbers, we have dates of transactions, reasons for these transactions, and amounts. We are told that the balance of the petty cash as at April 30th was $15. We are therefore using $15 as the balance carried forward from April 30th. The petty cash is maintained at $200. You are required to restore the impressed at the end of the month. Enter the transactions and balance off the book. Restore the impressed using a check dated May 30th. Here we have a sheet or page from the petty cash book known as a petty cash disbursement sheet. Debits, credits. We are told that receipts are recorded on the debit side and payments are recorded on the credit side. If we look, we see a cash received, date, details, PCV, petty cash voucher, total, traveling, postage, cleaning, vehicle, and office expenses columns. The cash received column is for the receipts. Date is the date of the transaction. Details would give particulars about the transaction. PCV column will store the petty cash voucher number. Total will store the total of each transaction. And these columns here are referred to as the analysis columns. So let's get started with recording information into the petty cash. We start with our balance of petty cash from the previous period, balance carried forward from April, and our new balance brought forward for May. If we look here, we are going to see the transaction has been recorded. Here we see cash received $15 May 1st, and it represents the balance brought forward. $185 of cash on May 1st represents the amount that is required to restore our interest of $200. It's said here that our interest is maintained at $200. So let's move on to the second part of the recording, which would be to record these transactions. On May 3rd, voucher 1 was given out for traveling in the amount of $25. So we're recording that May 3rd, details would be traveling, petty cash voucher number 1, $25, and we enter this into the corresponding analysis column. In this case, it would be the traveling column. So as you can see, the total is entered in two places, in the total column and the analysis column to which the item refers. May 5th, cleaning, $18. Voucher number 2, $18. And we put it into the corresponding analysis column. May 9th, postage, $7. Voucher number 3, $7. Into the postage analysis column, $7. May 13th, stationery, $15. Voucher number 4, and it goes into our office expenses column, since there is no corresponding column for stationery. However, office expenses, stationery is regarded as an office expense. May 19th, petrol, $25. Voucher number 5. Correspondingly, it goes into the vehicle column. May 24th, cleaning, $21. Voucher number 6. Corresponding column would be our cleaning column. And May 26th, van service of $80. Voucher number 7, $80. Correspondingly, it goes into our vehicle column. So we have just entered all these transactions shown here. So what's our next step? Our next step is to total all the total columns which are the columns containing the total and the analyses. If we total vertically here, we'll get $191. And if we total each one of these columns vertically, we'll get $25, the total of traveling, $7, the total of postage, $39 would be the total of cleaning, $105 the total of vehicle, and $15 the total of the expenses, office expenses column. What's important to note is that when we add all these figures vertically and horizontally, we get this figure of $191. So adding vertically and horizontally is a way of double checking that our figures are correct. Next, we balance off the account. So we work out our balance carried forward figure. Remember, when we are balancing off, the balance carried forward figure is the difference between the total debits and the total credits. In this case, 200 subtract 191, which is $9. So our balance carried forward to the next period, which would be June 1st, would be this figure of $9. So to begin our period, June 1st, we have a balance brought forward of $9. Note, the $9 is being entered into the cash received column. If we look here, we're going to see underlined in green and circled by check number 0053, you received on May 30th, you are to restore the imprest. Remember, the imprest is maintained at $200. So our new period, June 1st, we are restoring the imprest with a check number, sorry, I ran out of space here, 0053 in the amount of $191. How do I know it's $191? Because $191 is the amount that was spent from our petty cash fund. Okay, so let's have a look at the model answer. Based on what we have done so far, let's examine the answers. If we look at our sheet, we're going to see receipts being recorded on the debit side, payments being recorded on the credit side. We found the total of our total column, and we also totaled each analysis column. We found our balance carried down or carried forward by deducting total credits, 191, from total debits, 200, and we came up with $9. The balance carried down for the period May 30th would be the balance brought down for the new period, which is June 1st. Note where the figure is placed. It is placed in the cash received column because it's a receipt. So it's on the debit side of the petty cash book. We are told that the imprest was restored by check, and the check number was given on June 1st. So our new float or our new imprest for the next period is $200. Do you notice the similarity between June and May, which are the start of the period. So for every month, this is what is happening, or these are the transactions that take place in the petty cash book. And this is how the petty cashier balances off the petty cash book. I hope that you've enjoyed this lesson, and I wish you good luck in your petty cash questions.